It's Thursday, the 2nd of September 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Australia avoids a double-dip recession as the economy expanded heading into the current lockdowns. That's our main story. Also coming up in today's podcast, Victoria gives up on the idea of zero COVID cases after a surge in new infections. Housing affordability rises, in some of the swishest suburbs in the country. And Commonwealth Bank is being sued for lending to oil and gas projects. Then stay listening for my chat to AMP Capital's Chief Economist Shane Oliver about yesterday's GDP numbers. But first, here's a brief look at markets. Technology stocks led Wall Street higher overnight, with the Nasdaq up 0.6%, the S&P 500 up 0.3%, and the Dow Jones Industrial Average flat in afternoon trading. European markets were stronger, with the Stoxx Europe 600 closing up 0.5%. London's FTSE finished 0.4% higher. Back home, the S&P ASX 200 fell slightly yesterday to close at 7,527 points. There were some big falls among the large caps. Wesfarmers was off 3.3%, while Fortescue was 3.2% lower. Rio Tinto was off 2.4%. Woolworths, BHP and CSL all dropped sharply. Making up for the laggards were the banks and Telstra. National Australia Bank was up more than 2%, while Westpac and Commonwealth Bank were both up around 1%. Telstra was 1.3% higher. Major oil producers overnight agreed to increase production by 400,000 barrels a day, triggering a 2% fall in the price of Brent crude, before it recovered to be trading just down slightly. The price of gold was unchanged, fetching just over $1,800 an ounce, and the Aussie dollar rose after the release of the economic growth figures yesterday. It's currently trading at 73.7 US cents. Australia has avoided a double-dip recession, with the economy growing at a better than forecast 0.7% clip during the June quarter. The late morning announcement provided a boost for the share market and the Australian dollar, while bond yields rose. Lockdowns had a minimal impact on the quarterly figures, with stay-at-home orders kicking in for most regions after June 30. The GDP figures from the Bureau of Statistics are always keenly watched because they provide a great snapshot of how the total economy was performing. While trade and inventories detracted from growth during the quarter, consumer spending, business investment and government spending were all strong. The savings rate remains relatively high at almost 10%. Since June, the country has been hit hard by lockdowns along the East Coast. The consensus view is that the economy will contract by upwards of 3% during the current quarter, though we won't know the official figure for another 3 months. The question now is what happens during the December quarter. There's reason for optimism. Vaccinations are preventing serious illness, and Australia's vax rates are on the rise. Judging from last year, there'll be plenty of pent-up demand, which will drive both consumer and business spending when the economies eventually do reopen, and interest rates will remain low, and the federal government will keep doling out money. But this time, the economy will reopen while there are still hundreds or thousands of new cases being reported each day. How that affects spending is the big unknown. Yesterday, Treasurer Josh Frydenberg said the growth figures show light at the end of the tunnel, but said it was unrealistic for states to keep their borders closed indefinitely, particularly given the shortage of workers in some sectors. Opening up the borders in accordance with the national plan will be good for the economy, he said. What's all this mean for interest rates? Well, they will remain on hold for quite some time. The Reserve Bank has stuck to its mantra that rates won't rise until 2024. That's now looking like a pretty good bet. In a moment, the rest of the news you need to know this morning. In overseas news, inflation is the big unknown in the economic jigsaw puzzle in most developed economies. Eurozone inflation jumped 3% last month, with German price rises up 4%, their highest level since 1993. Central banks have been arguing that the current wave of higher prices is transitory due to COVID-19, but not all market economists are so sure about that. China has declared that foreign ships entering Chinese territorial waters will have to declare their presence no matter what type of vessel. The catch is the definition of Chinese territorial waters, with Beijing laying claim to disputed territories in the South China Sea, East China Sea and Taiwan. Chinese state media said the failure of military ships to inform Beijing would be a serious provocation, and the Chinese military would take over to dispel or take even stronger measures to punish invaders. The world's largest company, Apple, is asking all its US employees to reveal their COVID-19 vaccination status, though it has stopped short of mandating jabs. And staying in the tech sector, Amazon said it plans to hire 55,000 people, mostly in the US, in technology and corporate jobs in coming months. Last year, it hired an extra 500,000 people, and globally it now employs 1.3 million people as a result of consumers shopping from home due to COVID. Amazon now runs 164 flights a day across the United States to move parcels around the country. Locally, Victorian Premier Daniel Andrews has conceded a zero strategy for COVID-19 cases is no longer realistic after 120 COVID cases were reported in the state yesterday. It was the highest number in a year. The Premier said Victoria is now working towards a threshold of 70% of people having had the first jab by the 23rd of September. That's when restrictions will start being eased, including a return of school children to the classroom. There is some slight easing kicking in tonight, including the reopening of playgrounds, but a full reopening of the state is now unlikely until November. Mr Andrews said the border bubble arrangements between Victoria and New South Wales would be tightened, and under current caseloads, it was unlikely the border would reopen until next year. He said the community would have many more options once the vaccination rate got to 80%. Mr Andrews also wants the time between AstraZeneca jabs to be halved to 6 weeks, though he's waiting on medical advice. The state has run out of Pfizer vaccine appointments for under 40-year-olds, and he called on people to book in for the AstraZeneca jab. New South Wales recorded 1,116 new cases yesterday and 4 deaths, all unvaccinated people with underlying health conditions. The state continues to vaccinate people, and Premier Gladys Berejiklian has ruled out lockdowns once 80% of people are fully vaccinated. The ACT recorded 23 new cases. Almost 335,000 people received a vaccine on Tuesday, the second highest number for a single day. The national vaccination rate should hit 20 million today. Almost 60% of adults have had one dose and 36% are fully vaccinated. Prime Minister Scott Morrison was forced to defend JobKeeper payments yesterday in Parliament. When asked why the government hadn't required successful companies to repay the subsidy, the Prime Minister said the government had a deal with business to support them to keep people in jobs. JobKeeper payments have been increasingly contentious, as many recipients, particularly in the retail sector, have reported very high profits over the last year. Several, including Harvey Norman this week, said they'd repay the subsidies. US President Joe Biden has thanked Australia for its partnership and friendship in a video message to mark the 70th anniversary of the ANZUS Security Pact. Mr Biden is expected to speak to Prime Minister Morrison later in the week to discuss the US's commitment to the Indo-Pacific region, following the withdrawal of troops from Afghanistan. It came as Foreign Minister Maurice Payne and Defence Minister Peter Dutton confirmed they're heading to Washington for face-to-face talks with their US counterparts. Housing affordability has improved in some of Melbourne's more expensive suburbs, including Yarra, and in Fremantle in Perth and Adelaide City. That's because house prices have risen at a slower rate, but in areas in Sydney, particularly around the Northern Beaches and Baulkham Hills, it's deteriorated, according to CoreLogic. A deterioration in affordability is one of the main reasons why house prices may stop rising as fast as they have been for most of this year. Australia Post is taking drastic measures to get on top of the coronavirus-induced backlog of parcels and letters in distribution centres along the East Coast. It won't collect the mail in the ACT, New South Wales or Victoria from this Saturday morning until Tuesday evening. Aussie Post apologised for the decision, but said the safety of its people was its highest priority, and it needed to ensure volumes were kept at a safe and manageable level. Aussie Post has hundreds of employees currently in isolation. A Commonwealth Bank shareholder is taking the bank to court to gain access to documents detailing its decision to finance oil and gas projects, despite their potential to breach the Paris Agreement goals, according to the Financial Review. The case could trigger a new wave of climate change litigation as shareholders seek to hold companies to account for their environmental commitments. We're going to hear much more about shareholders wanting companies to be environmentally responsible in the run-up to the annual general meeting season. Metcash reported solid sales in the 16 weeks to the middle of last month in a sign that people continue to shop locally. Metcash supplies independent retailers such as IGA stores. Sales were higher than pre-pandemic, though not quite at the level of May to August last year, when shutdowns hit the nation and most of us shopped local. Metcas's share price fell 2.5% yesterday. The worst performer on the ASX Top 200 yesterday was vitamins group Blackmores, which fell nearly 7% after a strong run following its result last week. Part of the reason was because its major competitor, Swiss, think Ricky Ponting and Nicole Kidman, said online sales during lockdowns increased, but it wasn't enough to make up for lost store sales. And there's been a shift for people to buy more vitamins from supermarkets rather than chemists. Biotech group Mesoblast clarified comments from the US Food and Drug Administration after its share price tumbled more than 5% yesterday, following the 15% drop on Tuesday. Mesoblast said the FDA had not put on hold its clinical development program of its flagship drug to treat acute respiratory distress syndrome in adults with COVID-19. And payments group I Signed This, which is suing the ASX for suspending trading back in late 2019, will split its business into two, with one part likely to try and list on a European bourse. The company and its chief executive, John Karantzis, are being sued by ASIC over allegations Mr. Karantzis failed to disclose how revenues that resulted in hundreds of millions of bonus shares issued to him and key staff were earned. Up next is our daily interview, and I'm joined today by one of our favourite economists, Dr. Shane Oliver from AMP Capital. I spoke earlier about the growth in GDP during the June quarter. We might have avoided a double-dip recession for now, but there's a lot of uncertainty about what's to come. Fortunately, we've got Shane to help us, so this interview is a must-listen if you want an idea of how the economy and the share market will handle the next few months. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Thursday, the 2nd of September 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.